Good morning, everyone. I hope everyone is good. I see so many have joined, like Mr. Drona, Uma Valyani ma'am. Thank you, everyone, for joining this session today. Can we start the session now? If yes, please give a thumbs up. Okay, then it's great to see you all here again. Thanks for joining this session on corporate tax mapping tool in Tally Prime. Before we get started, I will just introduce ourselves about UHS Enterprises. We have been around in this business from past 12 plus years, supporting businesses across industries and helping them make the most out of Tally and related solutions. And also, we have one surprise. Like, we're also running a special giveaway. All you need to do is watch the video on our social media pages and comment your answers there. The lucky winner will receive a 1-year Tally Prime single user license, absolutely free. Results will be announced on 22nd September, so don't miss your chance. We'll also share the video link in our chat box. Do check it out and give answers on that. And let's move on to the session. Now, we are really glad to have with us Mr. Praveen Kumar, our business manager and product expert at Tally Solutions, with over 8 years of experience, strong knowledge on Bahrain, KSA, and UAE markets, and more than 100 successful live events behind him. He's the perfect person to take us through the session. Let's give a warm welcome to Mr. Praveen Kumar, and I will hand it over to him to get started. Welcome, Mr. Praveen.
Thank you, Samira, for such a generous introduction. Good morning and welcome everyone once again for today's session, where we are going to learn a lot about how we all can get started in terms of sorting our data for all the corporate tax filing purposes, which is due in just a couple of days. So yes, before we get started, let us have a quick brush up, a refresher on how the corporate tax works and what are the basic law and regulations that are in life. So we know that corporate tax was introduced in UAE from 1st of June 2023, and the administrative authority for VAT as well as corporate tax is Federal Tax Authority. Corporate tax completely applies to those businesses that profit and run their business across the region of UAE. It is not for any person or an individual, but rather it applies only for businesses. Of course, the objective was to align with the global taxation standards, and also the main idea behind this was to diversify the revenue where the heavy dependence on oil or natural resources was impacting the economy. The first tax period for most of the companies starts from 1st Jan 24 to 31st December, and the last day for filing is 30th of September, which is this month. So every year, all the companies that operate across UAE must file their CT, corporate tax. From the completion of their tax period, you still have 9 months duration to file it. So what is the scope of the taxation and applicability? As I mentioned, it is applicable for UAE businesses. But the question comes in, is it for all businesses or is it for some businesses? What are the criteria? So any companies in UAE that has formed, like let's say foreign entities that are operating on the landscape of UAE, any LLCs, partnership firms, LLPs, any individual or single person business, yes, corporate tax is applicable. Who are exempt under the scope of corporate tax? All those government bodies, all those businesses involving in terms of the natural resource extractive operations, all those businesses or the government entities that purely operate for the benefit of public and the pension funds, these are exempt specially. As we all know, corporate tax is a single standard 9%, which is applicable on the taxable income above 3,75,000. If your taxable income for the period is up to 3,75,000, then it is 0%. And for those companies that operate in free zone and not on the mainland, for them, it basically has a two bifurcation. It is mainly on the nature of business. So we'll discuss more about free zone entities in the upcoming slides. So the computation is very simple. The computation of corporate tax may heavily depends upon the taxable income, as we just saw in our previous slide. Now, how do you derive and what is the taxable income for the company for that particular financial year? So obviously, you'll start with Tally, where you're going to pick up your net profit and loss account as per your P&L in Tally. You will add non-deductible expenses. So as per law, there are few expenses which you cannot reduce it or you have to declare under the income. And there are certain income which you can use as deductions to reduce your profitability, which will indirectly reduce your corporate tax as well. And then, of course, applying the transfer pricing adjustments. So once you do these three steps, you take the P&L net profit, you add non-deductible expenses as per the law, and you deduct those exempt income as per the law, and then you apply the adjustments, then you will arrive at your taxable income based on which 9% applicability will depend on. So what are the partial deductions that government allows? So one of the very common expenses is the entertainment expense. Many a times companies spends on customers, shareholders meeting, and all these refreshments. In such cases, for customers, suppliers, shareholders, and business partners, you can claim only 50%, or you can include deduct from your income only for up to 50%. But if you spend for a team outing for all the employees, or you give some vacation expenses for only team outings that you take as part of company, so then it is 100% deductible. So with the CT mapper that we're going to take a look in later on, so you need to adjust whatever the expense that has happened based upon the FTA's law, how much you can deduct, how much you can allow, all of this. And as we saw earlier, you need to add up all your non-deductible income. So what are few of the non-deductible incomes? So they are mainly, let's say, all those illicit payments for trade license, contractors, or any legal fines or penalties, like be it like recently because of corporate tax registration, late registration, when you got more than 10,000 dirhams worth of it. So all those you can include under non-deductible expenses. Amount withdrawn from businesses by any taxable person or a partner for their personal use, all of this. So these are the list of non-deductible expenses. Next is exempt income. So yes, is corporate tax applicable on all the income that a company generates? Definitely not. There are few incomes which are exempt for corporate tax. For instance, if you invest in any of the local companies in UAE as a company, right? So many a times companies buy and invest their money into other companies. Like let's say you invest in Park in Salik, or let's say Adnoc. So the dividends that are generated and you receive from these investments locally or domestic dividends is 100% exempt. So similarly, there are a lot of other incomes like participating interest. Whenever you loan out to other businesses and you generate interest from it, it's completely exempt. Income from qualified free zones. So yes, business restructuring relief. So all of these incomes are exempt for corporate tax. So then we have something called related party transaction that we need to keep an eye on, which is basically, let's say, a common owner is operating under multiple businesses. For let's say there's a particular owner called Muhammad. He owns a scaffolding company. At the same time, he also owns a retail shops and also owns a restaurant. So whenever the transaction happens between his own companies, let's say he owns three companies. So when he transaction happens from his first company to second company, the law says you cannot underquote or you cannot overcharge, right? Since it is your own company, whatever the pricing or transaction happens, it should be shown as part of corporate tax as per the market value, right? So yes, there are multiple methods which the domain experts will know better, like resale price method, cost plus method. It's up to the filing of the CD, the domain experts who decide which method to follow. So yes, any transaction that happens between a common owner or related businesses, so then it has to be, the pricing has to be at arm's length, or what we call as market value. Yes, when it comes to free zones, the corporate tax is again, yes, definitely 9%, but it is mainly depends on what kind of business or activity that you're running. So government has bifurcated into two different categories for all the free zones. One is qualifying income, the other is non-qualifying income or activities. So there are few activities that fall under manufacturing, trading, fund activities, export of goods and service, or intellectual property, which are determined as qualifying income. So if your business mainly deals or more than 95% of your revenue is derived from these qualifying income, so then definitely you need not pay any corporate tax. It's not applicable. It's 0% for you. But if at least 5% or more than 5 lakh annually, if you generate revenue from your business from other than non-qualifying activities like banking, insurance, financial service, or real estate property in free zone. So all this follows under non-qualifying. Then 100% of your company's revenue is now applicable for corporate tax. So the calculation is right here. So as we mentioned, if any company, if they generate annually 5% or more than 5 lakh, whichever is lower, if you generate revenue from non-qualifying income, then 100% of your revenue becomes 9% applicable. This is specifically for free zone companies. So giving you a simple calculation of how the corporate tax works. Let's say, for example, ABC Limited, for the last year, Jan 24 until December 24, they generated, as per the P&L, the profit of 20 lakh dirhams. So as we ran through few of the list of non-deductible expenses, you have to add them back. So let's say it is around 1 lakh. So now total profit becomes 21 lakhs for corporate tax. So from that, we also saw your small list of exempt income like dividends and all that. Yes, now you can reduce that from your profit. So then 21 lakhs minus 2 lakh becomes 19 lakh, which we refer to as taxable income. So as we all know, the government says up to 3 lakh 75,000, there will be 0% of corporate tax. So again, from 19 lakhs, you'll reduce 3 lakh 75,000. That leaves us with 15 lakh 25,000, on which the 9% is 1 lakh 37,250. So for a company who made around 20 lakhs net profit as per the P&L, the tax liability for corporate tax becomes 1 lakh 37 as per the basic example that you have just ran through, right? So for the compliance purposes, the tax filing period is for the entire year. For the financial year, you need to file. You do have 9 months from the end of your financial period to file your corporate tax. The payment, typically it is made along with the submission of your returns. And the record keeping. For VAT, we all know up to 5 years we need to maintain the records. But for corporate tax, it is total of 7 years. So yes, now the CT mapper, what we're going to unveil next, the technology that Tally has used is the ODBC technology, by which it is bridged with the CT mapper that we've built on Excel. So all you need to do is the first step will be to map your trial balance with that of the list of expenses, non-deductible incomes, adjustments that we have already sorted out in the CT mapper. Once you do that, automatically the tax computation statement will populate, using which the domain experts can file the corporate tax. So yes, let me switch to the CT mapper in Tally. I hope you guys are able to see the CT mapper. So yes, before getting started with this, please do note that this tool is for calculation purpose only, and it is not a tax advice or a professional tax advice. Of course, domain experts can use CT Mapper to sort their data from Tally, so their life become much more easier to file the corporate tax. So the first sheet that we see here is a description, a basic understanding of what are the other sheets mean and how to use this tool to manage and file your CT. So we see here a list of all the adjustments and expenses and income that the corporate tax law stipulates for you to map your expenses and income. So all of these buckets have been defined as per the law. So once you move on to the data sheet, so this is where the Tally has used the technology of ODBC to extract all the data and automatically populate in your city mapper. So let's say on any of this cell, I can simply right click, but yes, please do ensure you have your Tally opened, you have the company opened in Tally, which you need to file for. For instance, so I have opened the Tally and we are trying to file the CT for Gulf Innovation LLC. So please ensure your Tally is open, your company which you're trying to extract and bridge with the CT mapper, that is open. So once it is done, click anywhere, right click on it. You'll start seeing this refresh option. The moment you click on it, the Tally Prime is automatically gets bridged and mapped with the CT mapper. So all of your data as per the company that's open in Tally will automatically be pulled here. As you can see here, all the data from Gulf Innovations company, it's already populated here. So then once it is done, you'll move on to the next sheet, which is trial balance and mapping. So basically this sheet is the heart and soul of the CT computation. So right here, what I'll do is there are two important categories which typically will play a complete role for corporate tax calculation, which is our indirect expenses and indirect income. So only these two are the main important adjustments that we need for calculation. So right here, for example, let's say, let me just clear this out. So yes, for instance, let's say, as I mentioned earlier, when it comes to entertainment expenses, if it is for employees, 100% we can declare it here. If it is for stakeholders or internal shareholders or anybody, our customers, it is up to 50% only. So definitely we cannot declare complete 63,000 of it because there were few expenses which stakeholders also were involved. So let's say, as per the calculation, I need to declare only around 35,000 for corporate tax. I'll mention this value right here. And here, all the calculation, and you have to map it under your CD buckets that we have defined as per the law. Let's say entertainment expenses, we'll just allocate here, and here I'll see what value to choose. I'll mention choose the specified value, and according to that, the value will be considered for our working sheet here. So giving you another example, let's say, so as we discussed about the related party, right? So whenever the transaction happens, a common owner is involved or a sister concern is there, wherein the transaction happens between those companies. So let's say the billing was done for 50,000, where the market value for such a professional and legal charge is only 45,000. So you have to declare as per the market value at arm's length. So let's say it is 45,000 here. That is what we will consider for CT calculation. And let's say there were few of the fines and penalties that was there. And as we know, fines and penalties and all 100% we have to declare here. So what I'll do is I'll just alt under a category, which is bribes or illicit payments. And here, instead of specific value, since 100% we have to declare, I'll just choose closing a balance for this. Let's say I'll choose a closing balance. So the complete 100% of this value, I'm taking it for calculation of my CT. So similarly, there are multiple, there are so many of the 79 items here from our trial balance, what you've pulled out from Tally. So the domain experts can easily map each and every items from this into their CT calculation. So once you've done for every single item here, choosing what value to declare or compute for your corporate tax, then you can move on to the next sheet, which is our adjustments. So right here, you will manually enter the company name, the tax period that you're trying to file for. And here you also will declare if any tax loss from the previous period you're bringing in, or if you're availing the facility of tax credits from any other countries, from foreign tax credits you're trying to use here. Yes, you have to manually input here. So once you've done this, so straight away you can jump into your CT calculation, where automatically whatever the mapping you do in the previous sheets will automatically sync in the CT calculation, where you will get exactly what is the tax and how much is the corporate tax that you're supposed to pay as per the defined calculations in the sorting of this data. So, and here also you'll also find a summary as to what are the adjustments that we have taken, deductions, additions, all of it, and then you'll get a summary of what is the net corporate tax payable to the authority. So this computation mainly revolves around for all the mainland companies, right? So this primarily for the mainland companies, how simple and easily you can bifurcate and sort your data that is required to file for your corporate tax. What about free zones? What about the trade companies that are operating from free zones? So yes, there's another version of CT mapper for them, specifically for all the free zone trading companies. So yes, again, here also we follow more or less the similar functionality. Let's say the first is disclaimer. Again, please do note this is only for calculation purpose, and definitely this tool can be used as a mapper tool between your Tally and by experts to further determine and sort your data for all your corporate tax needs. So once you go to structure here, it again gives you the list of all the buckets as per the law, what the FTA has defined. And in a similar fashion, you go to your data, right click anywhere, click on refresh. The latest data, whatever is open in Tally, will automatically be fetched here. So once it is done, we are also, even here, it involves the art of classification. So you will choose, okay, fine. So this particular dividend that we receive from the company, which again government says 100% we can claim. So you'll simply mention that here, domestic dividend, and what is the value that you choose to consider for it. Since 100% we can claim, I'll say closing balance itself. But the main differentiating factor from a mainland company's CT filing as well as from that of a free zone trading company is the bifurcation of your percentage based upon is it a qualifying income or a non-qualifying income. So as we discussed earlier, there are two main categories. What are the manufacturing, intellectual property? All of these activities government has defined as qualifying income. So and few of the activities have been defined as non-qualifying. So one additional and important step in this particular calculation is apart from your mapping of your data under these buckets, you also need to mention here how much percentage of this revenue was defined from qualifying activity and how much was from non-qualifying activity. So this bifurcation is the utmost important step in terms of filing your CT for free zones. So once you've told, okay, fine, let's say this domestic dividend we have received 100% from qualifying activity. So let's say I'll mention 100% of it here and then 0% here. So all of it is taken. Let's say there are certain revenue which it is 100% from non-qualifying activity. You'll define it accordingly here. So once you've done all the mapping and classification here, then you go to de minimis test. So this is where you will see pass or fail, which means if more than 95% of your company's revenue has come from qualifying income, you pass the test, which means 0% corporate tax. But if 5% of your total revenue or 5 lakh dirhams annually, whichever is less, has come from non-qualifying revenue, then yes, 100% of your revenue goes for corporate tax calculation. So yes, domain experts will know better what I mean in terms of determinism, pass, fail, and all of that. So here, once you've done this, in a similar way, the CD gets computed for you automatically. So you arrive at what is 9% total, how much you are supposed to pay to the authority. So since we have passed here, most of our revenue has come from qualifying income, so our tax is 0, which is what you can find here also in CD computation. Tax at 9% is completely 0. Though our income has been somewhere around 2 lakh. So yes, that is about how to use the completely automated CT Mapper tool from Tally to automate your corporate tax filing for all the domain experts who file for their customers, and many customers who already are well enough about the subject matter and want to file by themselves. So yes, this is how we have a walkthrough of the product. So yes, with that said and done, I now open the mic and dais for all our customers and attendees to ask any questions that you might have, or you can simply unmute yourself and ask me, or you can simply put it in the chat box so we can take it up. So guys, any question, please simply unmute yourself and ask me, or you can simply put it in the chat box of your Zoom control panel as well. I believe there are no further questions. Okay, we have one question. How do I avail the CT Mapper tool? Sir, our team will get in touch with you post session, wherein you can also have a handout of the recording of the today's session. We can further refer it to later on. And also the team will be sharing with you a thing. So please, our team will get in touch with you. Okay, we have another question. What is the technology used and how do we map the CT mapper to Tally automatically? Sir, as I mentioned earlier, we have used the technology of ODBC, so wherein Tally is automatically linked with the CT mapper. So simply open the Tally and the company that you want to file your CT, and then you can automatically pull the data as we mentioned in the CT mapper automatically. If you do face any issues, if you do need any support, definitely our team is right here. You can get in touch with any of our executives from UHS. Okay, thank you, sir. The session was helpful. Please do share the recording. Definitely, sir. We will do share the recording to you as well. Yeah. So guys, again, if there are any questions, please unmute yourself and ask, or simply put it in the chat box. We can take it up. Okay, I believe there are no further questions. So with that said, so I think we have come at a point where we need to wrap up the session. So guys, also we have just left a link in the chat box to our video that we discussed initially about. Please do refer that. and also you can refer the profile. But all the useful videos in terms of Tally and Tally's capability, it's already present. You can do refer that. So yes, thanks again. I believe this session has brought in a lot of clarity in terms of what corporate tax, and a quick refresher along with how the CT mapper is going to completely change and help all the domain experts and subject matter experts in terms of computing the 9% corporate tax for both free zone as well as mainland companies. So yes, please do get in touch with our team if you need any further help in terms of the mapper or Tally, of course. So yes, thank you guys. Thanks again for taking out your valuable time and joining us today. Have a great day ahead. Thank you.
All right, that it's for today's session. A big thanks to Mr. Praveen for walking us through corporate tax mapping tool in Tally Prime. Before we wrap up, just a quick reminder, our giveaway video is live on Instagram. Check it out, comment your answers, and don't forget to follow us on Instagram. The link is already given in chat. One lucky winner will get a free 1-year Tally Prime single user license. Results will be out on 22nd September. If you have got any questions or need any help with anything, feel free to reach out anytime. Thanks again for joining us today. See you all in the next session.